This is HFO's Multifamily Marketwatch, presented by Pacific Exteriors Northwest, a contractor specializing in siding and exterior envelopes, delivering exceptional quality and service for over 30 years. By Aprio, combining DeLapp's Pacific Northwest experience with Aprio's global resources to offer unparalleled tax, wealth management, and advisory services for real estate owners. And by Kennedy Restoration, helping residential and business owners recover from fire, water, mold, and storm damage.
Welcome back to Multifamily Market Watch. I'm Greg Frick, partner at HFO Investment Real Estate. Today we have with us back, it's been 18 months, Chris Page of JD Fulwiler with Insurance. Chris, it's been quite a run here in insurance the last couple of years. I'm glad you decided to take the time and sit down with us and kind of give us an update.
Well, Greg, thanks. It has been quite an up and down, actually probably up.
Right.
In insurance as of late.
Because the last time we were here, it was about 18 months ago, and everybody was in the throes of, oh my God, I just got my renewal, or I didn't get my renewal.
Right.
I just got a new quote. You know, huge numbers from 20, 30, 100% increases. It feels different now.
Yes.
Are we seeing new people re-enter the market? What do you attribute to that?
You know, I've seen this market before.
Okay.
I hadn't seen the other market before where it did nothing but go up. But I've seen this is kind of a standard leveling out of the property market. And there's new carriers that are coming in. They're still keeping kind of picky on it, but not as picky as what they were. For instance, before they wanted apartments 2,000 and newer.
Right.
Now that if you've got some updates, you can probably go mid-70s, 1980 and newer. The 2,000 and newer are still getting better pricing, but they are looking at the older buildings.
They are now. And this
yes.
is the new insurance carriers coming into the market.
New insurance carriers and the ones that were in there that chances are if you have a 1980s apartment complex and you got canceled 3 years ago, that carrier might look at you again.
Okay.
If you want to go back to them, if you've forgiven them for canceling you.
Because when we talked last time, that was the big, people were pulling out, and you even said, I remember distinctly, you said, hey, last time something like this happened, new carriers would come in, and again, the last 18 months ago, they weren't in.
They were not in.
So now they're finally coming back.
They are.
And what brought, is it just the ability to get market share? Is it, way they're defining risk?
Join the HFO community and get weekly multifamily intel. Click to subscribe.
I think it seems like they have finally found, at least in their mind, the sweet spot of a combination of loss control, which everyone, I'm sure, that has an apartment building, they got inspected, they got a 3-page, we want you to do this, and this. A combination of the loss control, increased premiums, and it seems like every once in a while in insurance, the people up above say we want to start making more money.
So it's almost like it was an overcorrection, and now they're coming back to
where it should, and if it's like anything they usually do, they'll overcorrect.
Right.
And then they'll come back. So the pendulum swung way too far. Now it's swinging a little bit this way, little bit. So we should end up in the next couple of years at a pretty
So are you
good
feeling
spot.
better then as
yeah.
people are calling you saying, hey, I've got a renewal coming up. We're getting more good outcomes versus all the bad outcomes. So that's and are they going back to their old insurers? Are they going back? Are you seeing more people now go to different insurers that are new to the market?
That's a good question. Usually it depends on the individual's personality.
Okay.
As I kind of joked earlier, there are some people that want those insurance companies to crash and burn. They'd never talk to them again. They canceled them after 10 years.
Burn the bridge.
Lose my number
type
deal. And then there's other ones that they don't care at all. Whoever gives them the best deal, they'll forgive everybody for anything.
Gotcha. And as these new ones are coming in, has the coverage changed? I mean,
It has.
deductibles have changed? Have the policies, the nuances of the policies, has that changed?
It has, and that's something you got to be careful of. Whereas years ago, it used to be everyone had $1,000 deductible.
Right.
Then it kind of went to $5,000. Now it's 10 is the common one, and 25 is not uncommon.
Okay.
Banks have so far, they're a little hesitant at 50 because that's the next level.
Tier up, right.
The other things that are happening, and this is to combat with insurance companies, what they'll do is if they can't loss control it away, if they can't raise the deductible enough for items that happen all the time, which they don't want to pay for. They want to pay for a lightning strike. They don't want to pay for something every year. They put exclusions in. So
we're seeing more exclusions getting
Yes.
put in as a typical policy.
Yeah, the big one is habitability. That's a claim the attorneys have come up with, which is your unit isn't habitable. Maybe they'll say there's mold in it. They'll say the water doesn't work right. The carpet's bad. There's leaks.
Okay.
They're afraid of things. There's things like that. The habitability has become a big liability lawsuit. So there are carriers that are putting habitability exclusions on. So you got to be careful on the habitability because if indeed that does happen, you do get sued for it. There'd be
no coverage.
No coverage, right?
Gotcha.
Right.
Got it. So that's gonna make So as people are looking at policies or comparing policies, you've got to make sure
Habitability.
the coverages are apple to apple.
Right.
Yeah.
And then there's some that are trying to get rid of water damage and backup of sewers and drains type, or limiting them to where it has to be something breaks. It can't be, some kid stuck toys down the toilet and started flushing the toilet. So there's some exclusions that are finding their way in on things that they thought they were paying too much on.
I got it. And what about replacement value, which is always when we used to look at policies
Right.
and somebody got a policy 10 years ago, they used to always renew it. The replacement value, are they getting a little bit more realistic, or they've gone, pushed that envelope as well on the replacement value?
The replacement value has kind of stayed
Okay.
right where it is now. They're going to want you to get up to it if you were stair-stepping up, if you were very low, but they're not increasing it a lot. And part of that is they're not increasing it a lot for a pricing tool
Okay.
because they don't want if, for instance, somebody came in with a renewal on a nice apartment building, came in with a 10% renewal, there's plenty of carriers that would be 5-7% less.
Okay.
And so instead of raising the values like they were, because that raises the premium.
Right.
Instead of raising the values, they're keeping them the same to keep the premium down.
Down as competing with other carriers.
Other carriers coming in, yeah.
Which is, like I said, compare where we were a year and a
Yes.
half
Oh.
ago. This is competition for, trying to get policies out.
Correct.
Great.
Correct. So that's that's all on the property side. The liability side is the underlying liability is about the same.
Okay.
As far as the premiums are kind of flat on that. Umbrellas are where the problem is now.
Umbrellas.
Yeah.
Just because of the increased liability with all the other.
What's happened is these nuclear verdicts on these lawsuits. I mean, these they'll throw around 50 million, 100 million, 200 million like it's chump change.
Right.
And the umbrella carriers, they're priced to where there's hardly any claims. And when they aren't very big. And now they're becoming more frequent
And bigger.
So they're trying to do their thing by either raising the premium or lowering the limits. You used to be able to get a $25 million umbrella. There were 5 carriers I could call, and they would do that in a heartbeat. Now you're probably $10 $10 million with those folks. They won't do the higher limits. They just don't want to be on the hook for the higher limits.
So do you think you'll see less carriers kind of playing in that arena?
Yes, there are.
There are now?
Quite a few less. And they've gone into, some carriers base it on zip code. Other carriers have it down to like cross streets, but it's crime score.
Okay.
Crime score on liability has become huge. Little bit on property, but more so on liability. And even more so on umbrellas. So if the crime score is too high, it'll either, the premium goes way up, they will only give you, say, $5 million instead
You're
of
not
10.
able to get those higher numbers.
Right. Or they cancel you altogether because of the crime score.
Wow, okay. Interesting. So they're kind of like where we were
On the property, yes.
insurance 2 years ago is now on the umbrellas.
Yeah. And so the banks that used to require 10 million and nobody cared,
Right.
because it was so easy to get.
Right.
It's become a problem now.
So you think banks will tweak that down?
I think they have to.
Yeah, okay. Because it's getting that hard to get those.
It is. And with anything, as you know, everything has to work out when the bank wants to loan the money. I mean, the expenses have to be in line, the guy has to have, or person has to have enough money and all that stuff. And the insurance was messing up that equation.
Oh, exactly. Oh, big time.
And so as soon as they're not getting any loans because of whatever the reason is, they try to undo that reason.
Gotcha. Okay. Now you brought up, on the umbrella specific zip codes and crimes. I mean, is there specific stuff for Portland underwriting? Or are you seeing that, or is it really just tied to the zip codes? Or are we still? I mean, how do we look?
It's on the zip codes.
It's all zip codes.
Yeah, it's all the zip codes.
Okay, on both property and umbrellas.
Yes. Yeah.
And then on property, we still. I mean, you brought up some vintages. I mean, are people able to get insurance now on the stuff built in the 20s and 50s, or? Funny
as it sounds, right now, there's carriers that will do, say that, even 1900.
Okay.
Up to, say, maybe 1960, if you have updated it at all.
Okay.
Which most of them have to have been updated.
Updated electric. And things
yes.
Like that. Right.
So there's carriers that will do that, no problem. And then there's carriers that'll go 1980 to today. It's that 1960 to 1975 that is now the problem, because they're not old enough to have everything replaced.
Right.
Because, the wiring still works, the electrical still works.
Right.
They have the bad electrical panels.
But most people have addressed those at some point.
They are, yeah.
Yeah.
And for some reason, it seems like the galvanized pipes they made in the 20s were much better than the galvanized pipes they made in the 60s.
Yeah.
So you're having problems with galvanized pipes. You got some polybutylene that's mixed in there that is, breaks if you look at it.
Yeah.
So those are the problems. Those are the problem childs right now.
Is that 60s, 70s, which
Yeah.
in this market, we don't have a lot of stuff built in the 80s.
No.
It's all,
It's
geared up in
60s and 70s,
70s,
yes.
and nothing got built again until the 90s.
Right.
So what are you telling your clients, and if they've got a 1972 project, that yes, they've updated the panels, are they seeing, not the same kind of increase we saw 2 years ago, but are there carriers out there for them?
There are carriers out there for them, and chances are they've already taken the hit.
Okay.
They're just not going to see, they're going to see more of a, instead of like a flat renewal or a 5% renewal, it's going to probably be maybe like a 10%. It's not going to be quite as good, but they are not the ones people are looking at now.
Okay.
What I try to tell them is, remember everything that's been updated.
Keep records.
Yes, and don't be afraid to call the previous owner and say, hey, what'd you do? Or look around and see if things look new.
Okay.
Find out if stuff is new. The other thing you can do is you can call an electrician and have them come out and say, hey, what do you think of my wiring? Call a plumber. What do you think of the plumbing? The best you'll probably get is, well, it looks okay. But,
Right.
and they're going to put a disclaimer, but who knows what's going to happen tomorrow. But at least you've showed the insurance company that you care to have somebody come out and look at it.
Okay. Because that's one thing I've noticed. I've heard from more owners, they've had more insurance inspections
Yes.
than ever before. And just, like you said, you get the list of, hey, somebody from the insurance company was out here and they want you to fix 1, 2, 3, 4, 5, 6.
Yes.
You'd rarely hear that 10 years ago. I
Right.
mean, it was kind of a one-off. Now you hear it quite a bit.
You hear it every year. I mean, the same carrier will inspect it the next year.
Yes.
And what can happen in a year?
I know.
But they do it anyway.
So what are the other mistakes you would think like owners when it comes time to renewal? I mean, like you said, one would be not knowing what you've done on improvements.
Right.
Are there other things that, look at their deductibles? What do you recommend now for clients?
Look at the deductibles. I would also give your agent, and if you don't have it, ask your agent or ask somebody, any sort of inspection you do on your own.
Okay.
Every year we do this. The hot water
So if
heaters
the
are on
management
it
company does
Yeah.
a annual inspection, use that as a
tool.
Okay.
Hey, we look for this stuff, so things, less stuff should go wrong. Every 10 years, we replace the hot water heaters, whether they need them or not, or 15 years, or whatever the time period is. We inspect the roof every year, and all these things. If you have a checklist of things that you do, anything that you have that would stop a claim from happening,
Okay.
those are information that the carrier needs to have.
And I'm sure they'd appreciate that they've got an owner that's
Yes.
looking forward and trying to
That
stay
isn't
on top of it.
using insurance as a maintenance contract.
Okay.
That's actually using it for insurance.
Gotcha.
Yeah.
Okay, so those are things they can do. What do you see in looking ahead in 27? I mean, are you thinking this is going to stay the same as what we saw this year, where you see, depending on the vintage, minor increases? I've even had some owners say they've had decreases.
Yeah, I think it's going to start headed downward.
You do? Okay.
I do.
Okay.
I'm not sure how much. I mean, I don't think you'll see a 30% over 3-year downturn.
Right.
But you may see a 5 or 10% downturn. Some of that might be eaten up if they go back to raising the values.
Right, as you're raising your
yeah.
replacement value, but at least the net effect may be
Maybe zero.
zero, but
You have more coverage but the net effect is zero, yes.
well, this is much more
Upbeat, isn't it?
upbeat than it was last time. I mean, last time
Maybe you'll invite me back
I
in
mean,
12
holy
months
smokes.
instead of
I mean,
18.
Well, I was hearing stuff from clients saying I got a really good renewal.
Yeah.
In the last probably 6 months.
Yes.
Like, hey, surprise, surprise! I didn't get the huge increase. Mine actually went down or stayed flat. So there was a sense that this was coming. But then hearing
Yes.
from you, I think you just
And it turned on a dime. I mean, it went from big increases, say in like December,
right.
to January. It's like someone flicked a switch, and all of a sudden, the increases were gone. From when COVID started until the start of 2026, I could count the marketing folks from insurance carriers that came to visit asking for more business on one hand.
Right. Nobody's there. Yeah.
I get 4 a week
So there's that many more coming back, and
coming in. In fact, I had one today. Hey, we want to make sure you know what we write. We want to write this. We want to write that. So people want to write business again.
And are they leaving other markets? I mean, are they leaving California, coming here?
No.
So it's just capital's out, ready to. Wow, that's great.
Yeah.
That's good news.
It is. And maybe, good point on the capital. Maybe capital found insurance companies because they were doing better,
Right.
because capital finds the best.
Right.
And so maybe all of a sudden now they've got a bunch of capital. Now let's go out and write some more policies.
And like you said, the pendulum, goes so far
It
one
does.
direction. There's room to come, and that's where you can get, competition coming back in.
It does. And I've heard the reinsurance has calmed down as well.
Oh, that's good to hear. Okay.
So, and that's an important part.
Right. Well, thanks again for taking
Yeah.
the time to share this good news. Because again, it's I don't think we could have continued the path that we were on 2 years ago. With
I'm
this.
not sure anybody could
I
have.
mean, it was like breaking everything. So
It was. Things couldn't get done. It was
Yeah.
too many deals got undealed,
Oh, you couldn't underwrite it.
No.
I mean, you literally could not underwrite that added cost, and
No.
there were some unknowns, and it was not great. So, hopefully, when we sit down again next year,
Yes.
it will have the same kind of
Or
status
better.
quo. Exactly. Well, we'll see you again next time on Multifamily Market Watch. Thank you. Thanks, Chris. That was
You
great.
bet.
HFO's entire office specializes in multifamily real estate, making us the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Like and subscribe to Multifamily Marketwatch videos on YouTube, articles on LinkedIn, and podcasts on all major streaming markets. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is a partner of the Global Real Estate Advisor Network.
Love the insights? Tap the like button and click subscribe. It helps us bring more multifamily news straight to you.